A very good afternoon to my esteemed panelists and ETBFSI. Thanks for providing this platform to discuss a very relevant topic that we have, building accuracy over data-driven lending. Now, when we look at the current market scenario, things have been moving at a very fast rate. We have buy now, pay later coming in, account aggregator framework coming in. Now, credit will now be disbursed on not only on the salary slips, but it will also be spent based on the spending habits. Technology is becoming day by day dominant in the financial services sector. There is an increased focus on the MSME, SME sector who have been kind of being served by the shadow banking part of it. So it's a very relevant topic, and I believe the panelists who are here, they are going to provide their input, insights, and how they are kind of handling. So let me first start introducing the panelists here. So we have Sony Arben, who is the CIO for the South Indian Bank. Next, we have Mr. Saroj Nayak, who is CTO UCO Bank. We have Mr. Vaibhav Joshi, who is Chief Digital Officer, Equitas, a small finance bank. We have Ratan Kumar, who is GM IT, Central Bank of India. We have Mr. Ranganath Sadasiva, who is the Chief Technology Officer for Hewlett Packard Enterprise India. And finally, we have Dr. Shidan C. Murphy, who is the Director of Data and Analytics Solution for Altair, based out of Singapore. So if you look at it, the panelists, they include from public sector bank, private sector bank, a small finance bank, and also from technology service provider and a data and analytics company, which has been kind of servicing industry based on data and analytics part of it. Now, let me just set the context and moving ahead. So the first one, if we look at in the financial services sector, during the last decade, there has been a lot of changes happening in the digital lending side of it or on the lending decision-making processes of it. Now, these decisions have been moving towards data-driven, and a lot of credit underwriting models have been developed, a lot of data, which have been technically structured data which the financial institutions have. You have the credit bureau, you have the other institutions who have data related to NPAs, etc., available in the industry, and balance sheet and etc. being kind of brought in together to build the credit underwriting model. So what has necessitated these changes toward the data-driven lending, and what are the various use cases that the various financial institutions have kind of started taking up, driven by the data? So now let me take these questions to Vaibhav, to you, because you have been working in a segment which is very different, and the whole objective for you, it was to provide credit to a segment of customer who have not been really served well earlier. So what has been your opinion on this?
Thank you, Asim, and hello to all the esteemed panelists. So, Asim, this is a very relevant question today, because what has happened is, traditionally as lenders, all financial institutions have been looking at lending from one perspective, which is, the organized data sector. Okay, there have been, frameworks in place like CIBIL, CRISIL, from where the data gets fetched in, and there is a bureau reporting that happens, and a bureau score is actually created for an individual or institution, and then basis that, the data, basis that data, the limits or the lending is decided. What has happened lately, Asim, is that a lot of alternate data has started getting generated, and that alternate data actually helps in creating a financial profile of the consumer, which is much more than what the traditional credit agencies have been, creating their financial profiles on. So when we talk about, a CIBIL data, when we talk about, any other data points, and when we talk about, providing a decisioning basis, that particular data, there is only a certain set of, structured lending that can happen. But the need of the hour today is that, India is becoming a lot more digitally savvy. India is becoming a lot more digitally inclusive. A lot more, underbanked and unbanked population is coming into the banking ambit, either through, fintechs, either through, programs launched by the banks, or through business correspondents. And that is where, the need for unsecured, unstructured, alternate data-based lending has come in. Okay. Now, if you talk about the segment that we have been lending traditionally, then a lot of our lending has been basis the alternate data, except small finance banks and NBFCs have been doing it through a method. They had put in a method to madness when they were created, and that method to madness was where they would physically visit the site of a small trader, a small MSME. They would physically verify the premises. They would physically take stock of the goods. They would physically evaluate that, and then basis that the credit decisioning would happen, and a credit line or a credit limit or a loan would be sanctioned to that particular entity. Today what we are talking about is we are talking about digitizing those things. Okay, and from a small finance bank perspective, when we talk about digitizing those things, we are actually bringing a digital transformation bit into it, wherein the physical or the phygital process is actually becoming digital. But having said that, that is the traditional business that the small finance banks have been carrying out. There are a lot more use cases which are coming up, Asim, and these use cases are traditionally are now actually based on the new age paradigm that the market is getting into. If we talk about, and there are so many new to bank, there are so many non-credit customers who are actually wanting to get into the credit game, and there are customers who may not have a credit score at all, and banks are waking up to the possibilities that, hey, how do I actually go ahead and lend it, and actually have a few 100,000 or a few million transactions that they also carry out on a month in month out basis, and that is that alternate data that gets generated over there. Now this BC agent may be operating from a rented shop, but at the end of the day he's transacting with multiple banking portals, and he's carrying out services like domestic remittance, bill payments, micro ATM, APS withdrawals, and so on. Then that is the alternate data this is generating. Now let's talk about the 100,000 or the million customers that he services. Now there is also certain amount of data that gets generated over there. So there is a very good use case over there. Then we talk about MSMEs. MSMEs actually transact with their suppliers. So there is a supplier ecosystem that is there. Okay, there is a credible and predictive business that is going to happen through this MSMEs month in, month out. So there is a good amount of alternate data getting generated over there. There is an ecosystem that gets created. Then we talk about white collar, we talk about blue collar, we talk about millennials, we talk about students, we talk about Gen Next. So every segment that we talk about, Asim, there is a good amount of alternate data that is getting generated in each and every touch point. It is up to us as lenders to decide what sort of a financial profiling, what sort of a lending product we want to create basis the convergence of the traditional data and the alternate data. And I think sky is the limit, Asim, as far as use cases are concerned. We can just keep on replicating and there will be just no end to it. Over to you, Asim.
No, thanks, Vaibhav, and that's very interesting. And the first time I'm hearing a lot of sub-segmentation of customer and also micro-segmentation you are talking about. And that is the beauty of the data. If you have the sufficient data and the accuracy and consistency of data is there, then it makes life easy for you to define products and also do the lending based on each individual abilities, creditworthiness. So taking this forward, let me just move to Sony. And Sony, just COVID has provided a boost to the data-driven lending part of it. In the last 18 to 20 months, we have seen kind of the activities which has happened. The predictions were there that all the financial institutions will have challenges. Yes, there was dip in the first 2 quarters, but post that it has picked up pretty well. So what has been the impact of inclusiveness of digital lending? Have you seen certain amount of challenges, or have you seen certain amount of uptakes which has completely been different from what it was there earlier pre-COVID era? So over to you, Sony.
Thank you, Asim. When the first phase of COVID, when it hit us, the obvious alternative was to ensure that the business as usual is brought up back in terms of having availability done. The other thing was to accommodate the first to digital kind of customer base, which for many bank like mine, where we have a hybrid mix of customers, we boast of almost 93% of digital adoption among our customers, but still that 6-7%, a good number of them were coming on board for the first time to one of the digital aspects. So the key changes that happened, especially on the underwriting side, as far as digital is concerned, is that on the retail segment, there was a lot of pre-approved type of programs that we started building, which was there in some form in the past, but this was an opportunity where we felt that without too much of restrictions, too much of sort of journey challenges, we could actually have a completely digital pre-approved process, and that in various tranches it did quite well. We were able to use statistically built models for fine-tuning the offerings both on the PL side. We then later on added it on a pre-approved vehicle loan portion also. And that segment and that growth story has been something which has really accelerated post-COVID. Because as Vaibhav was also mentioning, the physical visits, the qualitative assessment that you would have otherwise done in a non-retail sort of business segment, that challenge was not there on the retail. And that was primarily made possible based on two segments of data. One is, of course, as a bank, we have built up the data of our consumer behavior over a significant period of time, which gives us a lot of inputs in terms of what the customer is doing with our bank. But in addition to that, we were also using a lot of surrogates, which was available in the form of data from bureaus, on top of which we started building models. So today we have custom scorecards built for PL, vehicle loan, housing loan, etc., which actually allows us to score the customers based on various parameters beyond the traditional bureau score. Having said that, the reliance or dependence on completely unstructured data sources is still work in progress for the bank, because this segment, as all of us know, post COVID has also gone through a lot of fluctuations, and some of those impacts of in the retail is slowly starting to be seen in various portfolios, wherein due to job losses and due to challenges that people are facing on the ground, the impact on repayment, etc., post moratorium is slowly starting to see. So now we need to gear up ourselves in terms of removing any biases that probably would have come in the model, to fine tune it, to do sufficient amount of back testing on a continuous basis to enrich those models. On the business side also, post-COVID, we have actually engaged a consultant with whom we are working very closely, wherein we are right now looking at completely rehauling the process be it lead to login to sanction, and sanction to disbursement, and post disbursement. To what extent can I bring in digital adoption in that entire stack? So we are partnering with McKinsey, and we are coming out with a model. There is a data-based, data-driven model that we are using, which is multiple modules, both financial, non-financial, quantitative, qualitative, which is actually getting used to do triaging of customers. I mean, for example, I would want certain customers to be straight through, certain customers who fall in the gray zone, and then certain strictly no customers who can be probably triaged right at the origin of the journey. Because SME, as you know, typically the turnaround time that it takes is very important. And unlike retail, rule-based systems generally cannot be enforced in a big manner. So you have to hit the right spot in terms of balancing between rule and the model-driven approach, which we have done, and we have just started the pilot on that front. So on the asset side, COVID has been a big game changer in terms of usage of data for banks like ours, where in addition to the traditional credit policy-driven approach, we are looking at data-driven approaches, which sits as a layer on top of the credit policies, and which then gets blended into the policy development and changes also, so that we can cater to the newly emerging sectors in the market post-COVID.
So thanks, Sony. And let me just extend that part of it. And you rightly said that reliance on unstructured data is still a lot to cover, but at least the initiatives have been taken. So now let me move to Mr. Ratan Kumar and just extended this whole process part of it, because you have embarked on a journey of data-driven and analytics-driven banking. So if we look at the whole life cycle of a loan, from lead to disbursal and then collections, so what has been your experience that without compromising on the credit appraisal process, how you have seen the impact of data, right? Because there have been, earlier there used to be a lot of focus on visiting the corporate, etc. On the corporate side of it, personal loan is slightly different. So what has been your experience? How you have been kind of leveraging the data and enhancing your credit underwriting models?
Well, thank you to the panelists. First of all, it's a journey. We are in the mid course, I would say, and we have been learning on this. As the fellow bankers said, we have been started using these data models and building our lending models accordingly. And mostly we have used this, or we are trying to use this alternative data for a smaller ticket size loans only. We have not yet started in a big way in the corporate loans kind of thing. Our foray into using the data and trying to automate the lending has started with PSB 59 loans. Actually, that is where we started our journey. Most of the public sector banks, because that was a challenge thrown upon us as the bankers, that we need to sanction these loans in a matter of 59 minutes. So that is where we have started, and we started using this data crunching from various sources, the surrogate data, what is there available in the GST form or the income tax returns or MCA sites. So all this data we are extracting through APIs and trying to use them for taking a comprehensive decision for lending purpose. So that is where we have started, and I think we are in the mid course on this journey. Let me humbly say that we are just at the tip of the iceberg. Actually, we are still evolving ourselves to make it a near automated model for lending. So that is how it is.
Thank you, Mr. Ratan Kumar. Now, let me just come to Mr. Saroj. And how do you kind of manage the challenges of aggregating the data and providing the insight to the business users? Because having different systems, data coming at a different timeline, etc. What has been your experience on this side of it, managing the data from different source at different timing, and the consistency and accuracy of data always a challenge, because how it is handled during the life cycle of a customer and not only the product that you have it. So how have you been handled, and what has been your experience on this?
Thank you, Asimji. Thanks for the opportunity. In fact, what our co-panelists they mentioned, in last few years, we have seen explosion of availability of digital data. Huge amount of Indian consumers data that is getting generated through website, through social media, including banks' own application and e-commerce also. So various data points such as corporate filing, that is from MCA side, tax data, that is from income tax, then legal records, director details, all these things now that is available. So what is our main objective? We want to use all this data to reduce the cost of customer acquisition, improve underwriting standard and this data also we want to use in our EWS, that is early warning signal. So big data and data analytics now, that is you can say that is one of the key pillars in the digital lending platform. So big data that will grow bigger as more consumers they come online, discovery, research, transactions and consumer services. All these things that is moving online. So this will enable lenders like us to take better informed underwriting decision, offer personalized and customized solution to consumers and drive higher consumer engagement, customer engagement for better customer satisfaction. And now also you are aware this RBI also they are after all the banks for this account aggregator. No doubt I can tell that will do a lot of transformation in particularly public sector banks. So nowadays most of the banks they are going ahead for tie up with the account aggregators and data aggregators. You mentioned this. I can tell this data and analytics that has reduced the disbursement cycle to a great extent. Just I will take only 1 minute. Let us take a example of the retail loan. So what the customer does, the customer requests for a retail loan using the mobile app. Then digital data like Aadhaar, PAN card that is captured, that is getting validated. Then eKYC also that is being done using the Aadhaar based. Then automatic check of customer credit behavior. That means we are getting the CIBIL data from CIBIL also. Then depending upon the alternate data like customers' income, debt, expenditure habit, we determine the credit worthiness of the borrower. Then depending upon the credit worthiness of the borrower, then there is a automatic rule engine which will ask the customer to choose the product which he might be interested. So I can tell, and inputting this signing of the contract, the disbursement, that is also happening automatically. These customers, they are signing digital contract using this NESL platform also. Then financial funds disbursement or financial or final disbursement that is being done to a KYC compliant account. So all these things are happening because there is lot of data and lot of alternate data that is being available to us. Thank you, sir.
Thanks, Mr. Saroj. Now let's just change the track and let me come to you, Dr. Murphy, because you have been at the forefront of research on the analytics and data side of it across domain. And a question to you is that if we take analytics, how can it impact the collection model and also manage the delinquencies in the financial services sector? And just to give you a perspective, the largest bank in India has 450 million customers. And if you look at the volume of customer and the number of transactions that it creates, forget about the unstructured data. The structured data itself is a challenge for anyone to manage and bring insight out of it. So what's your viewpoint on this? How the predictive collection models or early warning system, etc., can help to increase the efficiency of disbursement, efficiency of credit in the financial services sector? Over to you, Dr. Murphy.
Thank you. So I think this is a pretty interesting question from a number of perspectives. So, I mean, first, let me deal with this idea of, your traditional bank customer where the data, credit bureau data is abundant. We have very good ways of optimizing collections efficiency through prescriptive analytics, like constrained optimization. We've worked with a lot of banks where basically we're able to say, this is the probability of someone defaulting on a loan. This is the probability of someone paying the loan if they were to default. And the best way to collect this money is based, send them an SMS or go do an in-person visit, and taking into consideration the cost of these events and so on. And from a data scientist perspective, this is boring to me because it is solved. We are excellent at doing it. The real interesting part comes when people start dealing with thin portfolios, when we don't have credit bureau data, the concept of alternative data sources, and basically how can we solve this problem? I don't think a bank is going to be able to solve this problem, because when we talk even in this forum today, what we're talking about among the panelists is the idea of efficiency improvements and how do we reduce defaults? How do we increase collections? But the reality is the growth in lending is going to come from unbanked customers. And we are terrible at identifying the creditworthiness of unbanked customers. So how can we do this? The way we do it is through tracking them through, I mean, people think when they use Facebook, Facebook can hear me because they're so good at targeted ad placements. That's not true. I mean, what instead was happening is they're using location-based information, interests of the friends within your network to make judicious advertisement selections for you. The same type of data approaches can be done for lending. And so basically, when someone defaults on a loan, there's two reasons, either based on their ability to pay or willingness to pay. And both of these can be tracked through alternative processes. So willingness to pay is the concept of, look, it's almost equivalent to fraud. You know, if I've got your money and I'm going to do this, I'm never going to pay you regardless of how much I have in my money. This is an excellent way we can use like social network analysis or different ways of understanding this person's sort of ethical behavior. And then ability to pay, the best way for us, because in general, we have such a bad concept of using alternative data sources to understand default capacity, what we need to do is do experiments. Basically give loans out to people regardless of their default status. I suspect your banks can afford the default. Now, I mean, it's not my money, so I'm willing to do this experiment. But basically, we need to be able to take this approach of don't worry about shareholders, don't worry about bottom line or profitability. Basically run experiments, develop associations between these alternative data sources that people claim we have and the associated default and collection probability. And for that reason, I don't think banks which are more institutional and bureaucratic in nature, which focus more on efficiency rather than cutting edge, will be effective at it. And who's going to be effective? Probably startups, venture capital supported organizations. And where am I seeing this growth? I'm seeing a lot of this in the Philippines. I'm seeing a lot of this from large or startups coming out of Silicon Valley and India, of course, who also have this risk. When I say India, I mean startups focused on from the ground up digital lending, focused on and willing to take the risk on these unbanked customers.
So, Dr. Murphy, that is quite interesting, and I understand that Philippines and other places have been having a lot of action. In India also, we have seen action, but the challenge has always been to reach the scale for these startups, because they have been able to acquire customer, lend to the customer. When you talk about collections from the customer, there is always a question mark. But again, I think those are maturing, and they will kind of enter into partnerships with various financial institutions which are well established, have good policies, etc. And the regulation also plays quite an effective way. In a market like us, which is emerging and evolving and has gone through multiple cycles, the regulation is a bit tighter on that part of it, I would say, compared to the other institution. In US, every year 100 banks are allowed, or more than 100 are allowed to fail. In India, one bank failure also becomes a political issue part of it. So that's quite interesting. Now,
I mean, the interesting thing about India, 30 seconds, the interesting thing about India is, I mean, the way we get these alternative data sources is through tracking through mobiles. And basically you can be somewhere in India and there's no electricity, but each person has 2 cell phones. And so there is this there is this existing infrastructure that would allow people to do it, subject to regulations and so on and so forth.
Sure. Now let me just extend that to it, and let me come to you, Mr. Ranganath. We have been talking about data, all around data, utilizing data, building models on data, leveraging data structured and unstructured. But at the center is the customer and his privacy. How can data protection of borrowers be ensured? His data should not be available to each and every one. It should be available when he or she gives a consent for it. How you believe that the financial institution should address this very key question? And again, customer privacy, customer centricity, and so many laws are going to come in. What's your opinion on this and how it should be handled?
Yeah, thanks, Asim. There was a lot of data talk that was happening, and I'm sure the length and breadth of data is now spanning from edge to the cloud. And with so much of devices that one would have, you can assume it's just going to go haywire, right? In the way that you would want to have But the crux of all of this is what is very important in the context of business. How do you get the right elements there? So for me, data looks like, it is data that, and A perhaps is always available. T is in the context of time, and A is analyzed with insights. That's how I would kind of expand data nowadays, because everyone has data today, and it's only growing, and it is going to become 175 zettabytes in a couple of years. So that's going to grow. That's not the surprise part. But in the context of how do you harness that, it becomes very important. So 2 or 3 areas where we really focus on is more foundational to the very aspect of creation of data, assimilation of data, and then understanding of data, right? So how do you kind of store that voluminous data, and where do you position this data? Which location do you want to have that? Or if you're generating this out of mobile, as Shidan said, I think we are the largest mobile data producing country in the world. And it's only going to grow. A village, if I go, he gives me 2 mobile numbers. He says one for downside of the village and the other for the other upside of the village. So it's like that. So important, how do you analyze that? What is the kind of computing resources that you would want to do? Because there is this time paradigm which is very important, especially in this segment, in the financial segment, where if you don't take the right decision at the right time, or if you're not able to detect a fraud at the right time, then everything is lost. It's spilt milk. So it is in that context we'll have to look at how your infrastructure, how your data is really harnessed. Can it provide the right kind of performance? Can it provide the right kind of scalability? And how do you deliver this to you in the context of security, which is also becoming very, very important. The way I look at data and security both go hand in hand, and you need to kind of look at security more comprehensively. It's not a fort and a moat, right? Just have that in the periphery of an enterprise, but it needs to propagate down into everything that you have within your organization as technology that delivering the business results for you. So can we look at security from an infra level? That's where we come into play. We kind of have zero trust architecture devices from a compute and a storage perspective that enable you to scale your entire security and build your data forts, right? The second aspect that I see is the volume, veracity, velocity, the various types of data that you see. How do you handle that in the context of delivering that in an information lifecycle management, right? You, I think, made a point about how do you handle the lifecycle of a customer journey and how do you handle those data points. So for organizationally, for you to deliver that securely, you need to have the wherewithal, whether you want to keep it on a performance mode, whether you want to take that into an archive mode, or whether you want to keep it in a highly available mode. So you'll have to think about that. So the good thing, as I see, is on top of this, there is a lot of AI activity that is happening in this space today. A lot of startup organizations who are able to harness the data that is available. So we play a major role in ensuring that these business-oriented results that you see, right, an AI/ML project or anything like that, has the right attributes of the data and the compute resources, which enables them to kind of churn out the business results. Half or more of AI projects in the country are not getting the results that they would want. That's, if you think through, every CIO has AI on their agenda, but if you just think through as to why they're not being very successful, I think you will come back to not having a critical data plane, having a critical compute resource for that, and making that it securely available. So I think these foundational attributes is what we deliver with a plethora of solutions.
So you have raised a very valid question, and I agree with you that the success rate to achieve what is desired is quite challenging in the country, and people are learning from that part of it. But let me just extend on that. The topic for today was accuracy and consistency of the data, right? Data-driven lending part. How do we ensure that part? Because there are 2 types of, one existing to the bank customer. So you have certain amount of control on the data that is being generated through his transactions with you. But there are new to bank customer, and by luck or by lot of effort, he has reached to your digital assets. But then midway he drops off or he goes to somewhere, etc. How do I ensure that at every step of the interaction, I need to capture those details, make something insightful, and provide that insight back to the customer, and not only use as a financier, that to enhance my credit model, I should also leverage it and give him say 10 basis point lower than what he may have been expecting. So how do you handle that aspect of it in a real time, consistently and accurately?
Yeah, I mean, that's going to be a perennial problem if you ask me. You will have to find your ways and means of using AI ML to its fullest potential. But if you were to fundamentally look at it, the kind of data inputs that you would consider and the kind of data analysis that you would put on top of it becomes very important. While I'm saying so, it is less of technology and more of process and how would you want to do along with your organization and people around it. So that's very, very crucial. So many a times, we in our storage balances we say if there is a data problem, throw more storage at it, and it starts working fine. It never happens that way. So in that context, you will have to kind of understand what the real problems and issues are. But having said that, the nuances around which AIML technologies are being developed today are increasing. The kind of data that people are able to use, the pace at which they can really compute, is also becoming very, very quick. So what I'm seeing is a greater sense of maturity around all of this. But believe me, it's not going to be as easy as they say. It is only going to increase in increments, I would say. You will not really hit 100%, but a smaller increment means hundreds of customers in the context of India.
Let me just extend this to Vaibhav, and I would like to hear your opinion, Vaibhav, because you are at the forefront of interacting with your customers, new, existing. How do you see that? This consistency, accuracy, capturing all the data, insights, providing it back to the customer, giving them the benefit, because at the end the benefit should derive the customer should derive the benefit out of it, right? Whatever analytics we do. I know it's a bit provocative, but then again I will leave it to the bankers to talk about it.
So Asim, let me just add to it. It is not just about providing the service or providing multiple products to the customer. It is also about how accurately you are able to capture the data, how much you are able to work on the data, how much you are able to churn the data to the extent that you can actually refine the data and then use it to the benefit of the consumer as well as to your own benefit. Okay, and that is where not just AI, ML, but I think a lot of newer technologies are coming in, where there is a lot of there's a lot of intelligence that gets developed. See, now let me take a step back and talk about certain bank systems to give you a slighter more insight on how complex it is for the banks. When we talk about banks, banks are generally a compliance heavy, regulatorily heavy organization. And when we talk about lending is also a very complicated product suite for the banks. It is the same for NBFCs. So when we see this, fintechs who are agile, nimble-footed, and they say that, hey, we have all these jazzy systems, and we are going to go and acquire this customer and do all this fancy stuff. At the end of the day, the regulatory aspects are very, very stringent in the country, and at the end of the day, they have to rely on a banking partner to cover that particular lending. The underwriting should be done by a licensed authority at the end of the day, whether it's a NBFC, whether it's a bank, whether it's a small finance bank. These are the entities who are going to underwrite. So when these fintechs or when these agile companies come and partner with banks, what happens is they get into an engagement framework where there is some sort of a FLDG backed, first loan default guarantee backed model that comes into play, and then the distribution of that lending is carried out by this agile companies. Now that is where and why I gave this background is because, see, it's not that banks couldn't have done this. Okay, I heard Shidan mentioning that it's difficult for banks to go ahead and do that. It is not that banks could not have done this. Okay, let us understand that a fintech brings, other than the agility, it does not bring anything more on the table, because banks have more funds, banks have more intent, banks have the customer, banks have the data. Okay, it is just that the governance and the regulatory aspect and the operational aspect and the compliance aspect is so heavy from a bank's perspective. That is where the innovation actually takes a step back, and that is where governance and compliance takes over innovation. Okay, so you have a core banking system, you have a middleware, you have an enterprise service bus, okay, which is where every external system comes into talk into the bank, okay, and then you have intelligence layers which often are built at a different level altogether. You have nowadays you also have the API stacks, okay, that APIs that keeps on talking everywhere, and then again they get into the ESB to talk into the bank system. It's a complex maze of its sorts. And then you have this AI ML middleware that you try to create, or intelligence layer that you try to create, or build in certain bots who will come in, who will do the decisioning in a real-time basis, who will do the analysis on a real-time basis, and churn out the output in such a manner that your credit systems are able to pick up that data and then come to a conclusion that whether it's a yes, whether it's a no, whether it's a B, C, whether what kind of a profiling do I want to put into, what kind of a scoring do I want to get into. And then there is a plethora of alternate data that comes in. So there are different systems to manage. That is what Shidan was mentioning, and that alternate data also has to come into these systems. So from a bank's perspective, when we look at this holistic thing, we look at it where either the banks can innovate, either I can innovate it on my own, but then it will be very difficult for me to actually put it into my core infrastructure. So that is where I would like to, and that is what we are doing. We create a temporary infrastructure or outside infrastructure, and we build agility over there, and then we start doing it. And so there somewhere I may tomorrow, and that day is not far, where a LOS or a LMS may become a thing of the past. Okay, and today we have seen that happen. We have seen a very strong fintech come up and very recently acquire the status of a small finance bank. Okay, and I don't think they would be using the traditional LOS or LMSs that the banks have been using. They have created their homegrown technology, and I'm sure the technology would be as robust as what banks are having. But the decisioning and the agility would be much better than what the fintechs are having, because the company used to be a fintech on its own, and they have launched a very beautiful unstructured product that is out there in the market. So today banks are going to have to wake up to that reality. Asim, banks are going to have to face that reality that tomorrow these kind of challenges are going to come, and pure dependency on legacy systems is not going to work. Banks will have to bring in agility through these kind of alternate database systems, and possibly keep it outside their core systems, so that operational governance, etc., does not slow it down. Asim, over to you.
Agreed on that part. And there are two examples also. One is Marcus by Goldman Sachs on the retail side of it, and Starling Bank focused on the MSME in the UK, who have done pretty well on that part. But let me bring in Dr. Murphy out here. So you talked about prescriptive analytics, predictive analytics. Now let's talk about real-time analytics. And there are people talking about nudge engines, not only for the customer, but for my collection agent, for my sales team, for others also. How do you see that the future looks like from the technology perspective and the analytics perspective? Like Vaibhav is very worried as a banker at how things will shape up in the future. What's your opinion here?
For the future, I mean, I think where I see more and more people going is basically doing away with in-person investigations, and rather the goal that there's two broad goals I see agencies going towards. And that is a much better perspective on who their customers are. So some banks, they're very, very far from it, but they want a total real-time visualization of what the customer transactions are actually doing. And just a big dashboard showing what's going on. And so whether that ultimately is successful or not was very clear, is the need to go into a real-time type infrastructure of the types of transactions that are happening and moving forward. The other major direction is much greater connectivity to the individual customers with digital apps. And so digital lending and services through the mobile phone. And basically some banks have actually done this successful. Someone signs up immediately to an agency with very limited checks on their identity. Basically what happens is that There's interrogation of who the individual is through accessing private information in the telephone. This verifies their identity to reduce fraud. And then once that's done, they can immediately assess their creditworthiness, taking the risk of increasing default. And so I think that's probably future, much far future, depending on the country, much greater automated systems that service the client on an individual level. So moving from a segment to an individual type action.
Sure. So we used to talk about relationship-based pricing in the earlier days as a banker, but I think that will come to that level. So good. Now, let me just move to the last section of this discussion, and I will come to Mr. Ratan Kumar. There are a lot of talks happening on ESG-based lending, and we heard in the COP26 also a lot of discussions going all around the banking sector as well as other industry. There is discussion on the ESG side of it, and all these have to be driven by the data. So what's your viewpoint? Is it going to have an impact that how we lend today, or is it going to be something which will be slow, and we'll see how it evolves?
So see, what I can see is that as we go forward, this is going to be more and more challenging and complex. One is the unprecedented availability of data, the powerful enhanced computing facilities, the penetration of mobile connectivity, the cheaper internet facilities, and advanced AI and ML algorithms which are available. I think these are all the things which are driving the entire technology and the financial space in total. And banks are confronted with a huge amount of data what they have in these systems. Now, how do we churn this data to make a right decision and a quick decision? Ultimately, there are two things which are to be met. One is the speed and the other is accuracy. These are the two important pillars on which the entire lending happens, and that is where the analytics comes into the foray, and how we are going to use this data to provide facilities and services to the customers. That's where the challenge is there for the banks to come forward. I think that's what it is.
Okay, let me move to you, Sony. What's your view on the ESG, how it is going to impact on the lending side of the business, and how technology can solve this problem?
Asim, in India, I think it's still early days as far as, if you talk about the green loans or the sustainable loans are concerned. But one important point that I strongly feel will be very helpful is primarily tracking the end use of the funds. That's something which in today's digital world, we would probably be able to, kind of collate the data points, which can, in some form of an analogy of the telemetry the kind of systems that we have, would probably be able to, detect and give feedback to the loop in terms of assessing some of that. There are major banks in the country who are already started to talk about how this can be probably added in the pricing structure, be it on the interest rates, on the charges, etc. And I'm seeing a lot of value add that is coming in. One point that is of especially on the, again, coming back to the retail front, etc., and to the partners, the fintech partners that Vaibhav was mentioning too. Basically, in India, the ability to pay, the intent to pay, etc., are factors that we have now getting more data points. The one thing that we probably have not discussed is the medium of payment. That's something that India has done extremely well. I mean, if you look at all the form of payment options that are available, we were talking earlier about nudge. The basic the fact that today using UPI and all of that, you have an auto pay feature that is coming up is directly what the nudge economics is all about, where you're doing the default thinking to help that. So I'm seeing a lot of that trigger in, especially on the retail and small and medium sector. On the corporate end, on the ESG factor, I feel that it will be more of the end use distribution and banks willing to kind of ride on that to offer competitive pricing. I think that's where we are headed very soon.
Thanks, Sony. Mr. Saroj, just coming to you, do you see any challenges from the technology perspective in handling the data for financial institutions? Because we have been talking about blockchain coming in, trade finance is already adopting that part of it. AI/ML people have been talking. Neural network has been there for 20 years, and people have been trying to build model on top of it. Self-learning codes are coming in, which can learn from all this data and try to build that. So, is there any challenges that you see that we will be overwhelmed by technology, and then lending will become a subset of it, or lending will still hold the front and technology will still enable it?
Uh, if if you see this technology, why we are interested for technology or for implementing this technology, at the end of it, we want to achieve one thing, that customer expectation. See, right now, what is the expectation of the customer? If you see now, being a public sector bank, we face a lot of difficulty while facing the customer, because now customer expectation, it is defined by the experience they are deriving out of this Google, Amazon, Flipkart, or Paytm. So consumer, what they want this frictionless experience, intuitive and convenience experience for all their needs. That's what we have to deliver. So this is possible only if we use this AI and ML type of things. See, actually, you were discussing about the delinquency factor, and in fact, in our bank also we have implemented this EWS, early warning signal. So at the end of it, this is helping us. This is giving analysis, or this is throwing alert. Which are the accounts that is going to slip to NPA, or what we call it at SMA. So implementation of the technology is a must, but at the end of it, we should know what exactly we want to derive out of the technology. My neighbor is investing lot amount in technology. That does not mean without deriving any benefit for my customer, for my organization, I should use. You mentioned something about blockchain. In fact, I have long back, blockchain is being used in trade finance, and there is group of banks who are in the pilot phase, but still it is to be rolled out for all the banks. So definitely, no doubt, what Bill Gates states, banking is necessity, not the banks. That means technology will replace the banks. But at the end of it, I can tell we should invest in technology depending upon the benefits derived out of it, sir.
Thank you. Let me come to you, Mr. Ranganath. So, how do you see the future?
As I said, I strongly believe technology will have an impact. And the space in which we play, there is technology and adoption of technology that will mature as well. We had an era where people were having things in their premises. We had an era where they went to the cloud, and there is an era where we are seeing everything being delivered as a service. So what we have done is we've taken the technology elements, whether it is in terms of the compute needs, whether it is in terms of the storage needs or the analytical prowess that you would need, or a software stack that enables you to handle both structured or unstructured data. All of that being delivered as a service. We call that green layer. Where we are able to improve upon everyone's experience that came out of cloud. But the other related problems, especially in this industry, when we talk of security, performance, availability, compliance, these kind of aspects, right? We have seen that being, that sense of maturity emerge in the marketplace. So this everything as a service is something where we have put in a lot of effort to ensure that every organization in this space is able to leverage upon the benefits that we see out of technology. So technology at your doorsteps, or the cloud at your doorsteps, and whatever technology option that you would want to see.
Sure, thank you. So I would like to thank all my esteemed panelists. It has been quite insightful, and I will just summarize a couple of things which I kind of gathered through this discussion. One, data and analytics is going to be at the forefront of driving the banking business. Technology is going to enable that, but yes, there are some risks, and which, like Vaibhav and Mr. Saroj was also talking about, that there are going to be disruptions happening in different kind of business models, but primarily supported by technology, like the traditional core banking system or a LOS, LMS may have challenges there. Availability of data, huge amount will be available. It is for us to define that how we want to leverage that. AI, ML, and the enhancements in this field is very, very essential. Maybe patents will not be coming out from banks. We don't know. Some more patents can come in collaborations with data and analytics company working very closely with the banks and financial institutions. But the complexity of doing business is definitely going to grow. The regulators on one side, customers on the other side, and the technology getting day by day transformed, and investment not coming to the CTOs and the CIOs and the CDOs from the budget board. So it's quite an interesting environment, but we all are geared up. And once again, I would like to thank ET-BFSI for bringing all the panelists and myself, Asim, Parashar, out here on the platform to discuss this interesting topic. And lending is going to support the growth of India. We are all positive on that, and we are embarking on a growth journey. Thank you, everyone.